Now, one other thing you also need to know is the fact that there are various types of risk. There are various types of transfer. There are various types of insurance. So you can talk about life insurance. You talk about social insurance. And here, social insurance is where government comes in. So we have the SNITs and then the pensions. We have pensions. We have property insurance. You have marine insurance, fire insurance, liability, and guarantee insurances. Now, insurance is built or undertaken through principles. And let me say it's a legal contract. Now, every contract has principles governing it, isn't it? So, with insurance, the principle of insurance spans from insurable interests, which permits an individual who has a legal right, financial, and relationship with the subject matter to partake in insurance. Basically, what I'm saying is that if this book is yours, you can insure it. I'm sure if you go to my brother Blansing, because he's with a general insurance, he will insure it for you if it's yours. But the book is not yours. Why do you want to insure it? If the book gets lost, what is it for you? So for those of us who love football, think about a favorite footballer and ask yourself, will I do insurance for him? So the legal financial relationship with the subject matter will determine your acceptance for the insurance uptake. Then we have utmost good faith. Fundamentally, this principle requires that you will be honest and sincere with your declaration. Because of the contractual relationship, you need to declare voluntarily everything that will help in the insurance transaction. If you fail to do so, it goes to the heart of the contract, which you should know. And it can render it null and void ab initio, meaning that for the section of the policy, in fact, there is no policy. Then we have proximate cause, which is the effective and active cause of a risk occurring. So that motor accident, what led to it? That fire in the home, what led to the fire? Is that insured? If it is, then you will get compensation from the insurance company. And this active force must not be truncated or intervened by any other force to make it effective for the acceptance of liability. Indemnity and subrogation, I call them a brother and a sister. These two helps in the completion, subrogation and contribution are brothers and sisters. They help in the indemnity process. Indemnity is bringing you back to the position you were before the risk occurring. This principle is very important because people miss it most of the time. So if your car is involved in an accident, but there's something here we must note. If you are involved in an accident and you lose your leg, can the insurance company bring back your leg? Yes, so when we talk about compensation in insurance, this is what we are meaning. That the insurance company will give you the financial support to get at best artificial leg, but it can't bring you back your natural leg. Things because it goes to the heart of the policy, and that is a principle of insurance. Now, subrogation basically means that if I am involved in an accident with you, my insurers had to compensate you. Now, my insurers will compensate, but when they do, you don't have the right to chase me again. Your right to chase me for compensation, you have subrogated it to the insurance company for recovery. Now, the contribution, which is the sister of indemnity, is about the fact that if the limit of compensation, the repair or the amount of estimate is more than the limit of compensation, then the tortfeasor or the wrongdoer, anybody doing law here? Okay. The next session will look at insurance and the law. So the lawyers who are training, bring them on board. Now, the wrongdoer or the tortfeasor, as we'll say in insurance, will be the one whose insurers will compensate. Now, let me give you a practical example. Motor insurance, as we are doing currently. Having said all these things, it's important to realize that insurance is very practical. So what you will learn in class, when you come out, you need to gather experience and you need to gather all that it is to make sure that you are well on the ground. And so what are some of the careers in insurance, which is our main talk? So I started by telling you about the regulator and the fact that the regulator ensures that companies are well registered to do what? To sell insurance. But to sell insurance, there are things that the insurance company must have in place, and that provide careers for people who want to come in the insurance fraternity. So we have what is called underwriting. Underwriting. What do these people do? Underwriters are insurance professionals who evaluate and decide whether the risks presented should be accepted, transferred, and priced. Risks offered or presented should be accepted and priced. Now, I took you through some analysis of mechanism of insurance. This is where these underwriters do that more. So, in setting the premium of the price, then we need the actuarial team. Where are the actuarial people here? You will do your analysis, you will do your computation, you will assess the risk, the location of the risk, what pertains there. All these comes under the domain of the underwriter. And the skill you will need is analytical and thinking mind, swift decision making, good faith, and integrity. Your role can transcend life, health, property, automobile insurance, but you need to be a risk analyst.